Guys, the analysis in my last video was absolutely spot on. If you want to catch the next move, I encourage you to watch this video from beginning to end, because I will be covering lots of important factors on the chart here. I will explain how my analysis in the last video played out, and I will go over 3 different opportunities that you could have taken during this downward move. And I will be giving my analysis of where the stock will be going in the future. So I really want to provide lots of value to you here, so let's dig right into it. Okay, so first let's talk about what I pointed out in my last video to quickly bring you up to speed on current events. In this screenshot of my last video, I was pointing out a major descending trend line. And I also noticed an ascending triangle, which is a bearish pattern. On top of all of that, there was a bearish divergence on the daily. So I mainly pointed out bearish factors, and I told people that my entry would be a close below this line. Now let's go back to the current chart. You can see that it actually played out just as I expected. If I were to zoom into the 4-hour chart here, we can see that there is indeed a close that I pointed out, and it started falling from that point onwards. If you have not seen my previous video, I do recommend you go watch that for a more in-depth analysis of how I saw this move coming. But right now, I will move on to the opportunities that you could have taken during this move. Something important to take note of here is the 20 exponential moving average on the daily time frame. Price has been above it for 2 whole months during this upward move, so it is pretty significant. There was one time it dipped down near it here, and then bounced away from it. So this is going to kind of act like dynamic support on the way down that we can take advantage of. Even though the stock is bearish, you can still take advantage of the bounces on the way down. Even though I would not recommend trying that because the momentum is not in your favor overall to go long. But I will show you what you could have done anyway, just to give you an idea of the possibilities for the next time something like this happens. I am going to go all the way down to the 1-minute time frame for this first opportunity. Also, this blue line is the 20 exponential moving average that we talked about on the daily time frame. I coded an indicator that lets me carry the same line across multiple time frames. Anyway, notice how the candles were using the blue moving average line as a support. It touched and bounced away from it 3 times. And look at the descending trend line here. These candles here were a reasonable entry to go long. And it actually worked out on the 5-minute time frame. But just remember that this opportunity was actually the most dangerous out of the 3 because the momentum overall is definitely not in your favor on higher time frames. Now let's move on to one of the more effective opportunities. This candle right here, we can clearly see the candles closing below the moving average. This is a good entry because it is closing below the area that the price has bounced away from 3 times. On top of that, we have bearish momentum in our favor. So rather than that first trade I showed you, I would definitely recommend taking entries like this when the higher time frames are bearish. No entry is ever going to be perfect, but also make sure that you are using everything in your arsenal, like volume for example. An entry with a nice spike in volume is always nice to see. Before we move on to my favorite opportunity that presented itself during this bearish move, I want to explain what the purple lines are. Let's switch to the 4-hour time frame. Okay, so it is actually pretty simple. The purple lines are the bounce points that stood out to me in this time frame. They have the potential to be support areas for the price as it is falling, and as traders, we should carefully look to see what is happening around these lines, especially if we are trading short-term moves. Now, let's go into the 5-minute time frame to see the last opportunity. On this time frame, we can see that price gapped up during pre-market above one of the support lines that we found on the 4-hour time frame, and it actually bounced off of it perfectly right here. Also notice that the 20 exponential moving average acted as a resistance here. We always want to be on the lookout for little factors like these. That moving average should be a reminder to us that we are no longer in bullish territory right now, and we should avoid going long on this stock. Another thing that some of you may be aware of is that gaps are like magnets. Price will often return to where it gapped up or down from, and that is usually called filling the gap. So we actually have a lot of evidence telling us that things are looking very bearish on this 5-minute time frame. Take a look at this huge red candle right here. It is closing below the support from the 4-hour time frame and the bounce point created from pre-market hours. With the knowledge that bearish momentum is in our favor, this is a fantastic entry, As you can see, it worked out very well. Now, those were all the little opportunities you could have taken if you missed the main entry. But now I am going to tell you exactly where I see this stock going in the near future. I am still bearish as heck because if we look at the weekly time frame, it actually formed a bearish engulfing pattern. This red candle is swallowing the bodies of the previous two candles, and it is bouncing right off the descending line. So I am keeping it simple and remaining bearish until the chart shows me otherwise. If you enjoyed this video, consider giving it a like and commenting. I would love to hear what you all think about my analysis, and I will respond to anyone kind enough to comment. Also, there is a link to my Discord server in the description if you want to join my community. Thank you for watching, and I will see you in the next one.